Joining me now is Simon Cowan from the Centre for Independent Studies to talk about the economic situation. Thanks for joining us again, Simon. 0.5% boost in the cash rate is what everybody was expecting. What's it going to do?
Well, I mean, I think it's a big hit to interest rates. It's a big hit to mortgages. We've now seen 1.75% over 4 meetings, which is just 3 months. We're expecting that obviously to go straight through into mortgage rates again. As you pointed out at the top of the hour, that's going to be hundreds and hundreds of dollars a month for those who've taken out a mortgage. The issue is even stronger for those who have been incentivised by both sides of Parliament to get into the property market in recent years. We've seen both sides of politics take those sort of new first homeowner positions and policies to market. Those people who are likely to have higher mortgages will probably find things even tougher. But that's not the only impact that we see from this sort of very rapid increase in rates. The RBA put out an interesting set of forecasts indicating that inflation is going to stay high, above the band indeed, for 2 more years, and that economic growth, particularly in 2024 onwards, is going to be quite low. So we've seen a radical turnaround in the expected economic conditions outside of just interest rates. If you go back to the period before the election, the expectations was that the things were doing quite well. We're now seeing some forecasts and expectations that the next few years are going to be quite tough.
How culpable is the Reserve Bank? Because they were telling us a year ago or less that interest rates will stay pretty much close to zero for another couple of years, and that obviously gave borrowers a lot of confidence. And then they were very slow to put interest rates up. Were they spooked by the looming federal election?
Well, I think that's possible, and I'm happy to put a bit of a boot into the RBA for this. I think that there were plenty of signs at the end of last year and early this year that there was a need to start raising interest rates. We saw other reserve banks taking that, central banks taking those sort of actions. I think the RBA probably was late coming to the party. To an extent, the uncertainty around COVID justified a degree of wait and see, but the fact that the RBA has had to raise rates 4 times in 4 consecutive meetings and at the 50 basis point level for the last 3 is an indication of some fairly serious policy failures, I think, both at the RBA and in the government over the course of the last 12 months.
Yeah, well, I've got to say that all the economists I've been listening to, including yourself over the past year, 18 months, all saw this coming. You can't put that much stimulus into the economy and not expect to generate some inflation. Let's just have a listen to what the Treasurer, Jim Chalmers, had to say today.
They know that government changed hands at a time of high and rising inflation, rising interest rates, growing economic storm clouds, and $1 trillion of debt. And our job isn't to try and influence the Reserve Bank or to second-guess their decisions. Our job is to focus on what we can responsibly influence as a new government at the national level.
Yeah, absolutely. His job is to do what he can to help the situation. What can he do, Simon Cowan? Because if he's shunting out money to help with the cost of living, that's only going to exacerbate the problem. Doesn't he need to try and rein back all of the baked-in government spending?
Well, exactly. And this is a fundamental example of the problem with what Chalmers was saying last week as well. The government's policies, the ones they took to the election when economic circumstances were different, the ones that have basically been sort of at the centre of Labor policy for a number of years, are all more likely to make inflation worse and not better. The thing that's, I think, the 2 things that are most likely to contribute negatively, the government's continued insistence on advocating for wage rises that completely offset inflation. So we saw with the minimum wage case recently that the government was advocating for a 5.1% increase in the minimum wage. We see continually this message that wages shouldn't go backwards as a result of inflation. That, I think, is a dangerous message. It's likely to shift inflation expectations and make the problem worse and prolonged. And the second issue, of course, is that Labor's central economic plan is based around this idea of a massive investment in additional energy capacity, and everything in their plan, from childcare, from green energy, everything is based around the idea of additional government intervention, additional government spending and additional government involvement. And that's the kind of thing that will continue to cause these stimulus-based problems. What we're seeing from many on the left, though, is a refusal to accept that this demand stimulus even happened and that there's no government responsibility. You know, we see people claiming that it's excess profits that are causing inflation, both in Australia and particularly in America. And I think that sort of attitude is likely to make inflation worse and prolong this crisis.
Oh dear, the reckoning, I fear, is going to be pretty tough. Thanks for joining us, Simon.
Absolute pleasure.
Simon Cowan there from the Centre for Independent Studies. Yeah, big government, almost unlimited expansion of government has been very popular for the last couple of years. Even the Conservative parties haven't done enough to rein it in, of course. And there'll be a reckoning. Let's just hope too many families don't get chewed up by all of this over the next couple of years.